Hello and good day to all friends. This is Mojtaba Rasti from the Thales Group, and today is October 16th, 2025. I'm here with you to analyze Bitcoin using the Thales Market Screener tool. Please note that these analyses are purely educational and informational, and if you use them to take positions in the market, the responsibility for your profits and losses is entirely your own. So, as always, let's start by taking a look at the price situation. We've had a rather tiresome sideways movement in the market over the past few days. In the last day or two, we're still at this bottom, around 110,000 to 110,500, and the price hasn't decided yet whether to finally move up and complete the double bottom structure we've been talking about, or to move downward. To be honest, this double bottom we've discussed is actually a prediction of a double bottom formation, but it hasn't fully formed yet. For a double bottom, we need to see this bullish leg form and come up to this level. Only then can we be certain that a double bottom has formed, and then we can talk about its bullish leg. We talked about this a bit prematurely, predicting it in advance, but right now, you could even say this is a bearish flag, meaning a flag pattern like this, a descending flag with lower highs and a flat bottom. That's pretty much what we have right now, and we can say it's a descending triangle. Now, what might still favor an upward move is the divergence we're seeing in the RSI. You can see the rising lows in the RSI, though it's not showing up clearly here. Let me just say, we're not drawing the lines now, but there are rising lows in the RSI, while the price has flat lows. This increase itself could be a positive divergence, suggesting a possible price increase. On the other hand, for a downward move, you can see the weakness in the price and the flag structure, so that could also be evidence in favor of a price decrease. On the daily time frame, an interesting point is this candlestick that's forming today. In the past 2 days, actually, in the past 3 or 4 days, we had a green candle, which turned into a doji at the top. This doji candle signaled the end of the bullish momentum, resulting in 2 relatively solid red-bodied candles. Now, at the end of these 2 red-bodied candles, today's candle is again closing as a doji. Of course, there are still 10 hours left until it closes, but so far, it's a doji. This could indicate the completion of that potential double bottom, and then we might expect that. Tomorrow, we might see a green candle moving upward, and if this happens, the double bottom structure could potentially be completed. So, this could also give us a bullish outlook on the daily time frame. Now, let's move on to the market screener and see what we can gather from the charts there. Let's reset this to the raw database from today up to this very moment for the current contract. Tomorrow is Friday, the last week of October, which is an important expiry. 6,100 Bitcoin options have been traded below 25,888, resulting in this highly volatile chart. You can see the bottom is at 105 and the top is at 116, with a minimum of 105 and a maximum of 116. If we turn on the delta, you'll see here that the delta slope starts increasing from about here, going from 107 up to 600, and from here the slope sharply decreases down to 114. So, we can say our range is actually this narrow, between 107 and 114. If we move the slider forward, we can see that in recent trades, the downward leg comes up, gets closer to profit, then pulls back a bit, but overall, our situation remains volatile. Now, let's look at the process database. In the process database, the same structure holds, but we see a lot of negative open interest, apparently with high volumes of contracts that have been closed or exited. So, we need to exclude these from our analysis. I'll set open interest to 1 so that only new contracts are shown, and here the main picture emerges. With 1,615 Bitcoin, there's a clearly bearish outlook, a put purchase. You see, a put purchase for tomorrow, and we're at the start of its downward move. from 108 down to 800 and below is in profit. So, 108,800 and below is in profit. Therefore, this is a strong weight in favor of a downward move, and this can really give us an idea. Now, let's draw the zones and indicators and come back. Looking at the intersection of the buyer and seller charts for tomorrow, everything is very close. You see, at both the top and bottom, we're almost at the break-even area, and there's no clear dominance. The upper agreement is exactly at the intersection of the two curves, right at the break-even line, around 115,500 to 400, and at the bottom, 109,500, which is slightly in loss. So, at the top, it's just a bit closer to profit, and maybe that's why we can say the probability is a little higher, but both are very close. Let's put these into the indicator and come back. As you can see from the indicator bands, the upper band has moved slightly upward and the lower band slightly downward, indicating an indecisive situation and increased volatility for tomorrow, which matches the current market uncertainty. It's really hard to say which direction the price will decide to move. Let's update the zones and continue. You can see the upper and lower zones. Both have strong agreement. The upper zone is basically a line, meaning both buyers and sellers are targeting the same point. At the bottom, buyers and sellers differ by maybe $100 or $200 in their estimates, which is still very close. Naturally, you see the lower zone is closer to the price, and it's already been touched once by the shadow of this candle and could be touched again. Based on this, we can say the price might first test this zone and then try to move toward 115 again, which so far hasn't succeeded. It tried once here, pulled back, tried again, some volatility, and still hasn't managed to make that move. The upper zone is around 115,300, the lower zone is around 109,500, and the middle zone is 112,000, which is also where the maximum profit and loss for sellers and buyers is, but it's not a zone, just a line. Now, let's go back to the market screener and I'll activate the short contracts again, and we'll have the main shape of the curve, as well as delta and gamma. So, here, after I activate delta and gamma, you can clearly see on the chart that we have two distinct short gammas here, which come from selling calls. This is the sale of the 116,800 call and the sale of the 105 put, more or less. So, for the maker, we have a strangle at 116,800. Look, I'll highlight it in green, 116,800. Here, we have a long gamma for the maker, and we also have a long gamma for the maker at 105. You can see here that the steps. Actually, our maker is positioned on the lower side. The target is actually aiming for the lower level. Well, this in itself is an interesting point, but so 105 could be the next target. In any case, we can infer from this chart that there will be some fluctuation between this range, between 105 and 116 or 117. You can see here as well that we have a node, a change in the slope of the delta curve, where the steepest upward slope starts from 107 and the steepest downward slope starts from around 115. This itself could create a volatility range for us. As for the upward movement and the key points we have, one of them could be here at 114, where the downward delta movement begins. Then we have this gamma, which we mentioned earlier, and after that, we have this intersection. The intersection of gamma and delta is at about 121, and ultimately, we can say that this point here, around 124, is almost the end of the delta's upward phase. After that, there's another intersection between gamma and the red curve at 127.5 on the lower side. Look, right here is almost where the delta's upward movement starts, at around 107.5. Here is gamma, and you could say this point, around 104, is where the red curve enters the loss zone. Here is almost the end of the delta's upward phase, at 99.2, and we have this intersection, which is also the end of delta, at 95. These are also important points that we actually get from the intersection of the curves. Alright. Let's take a look at the coming days and see what things look like. If I add the expiration for the 18th, you see nothing changes. I remove Friday. For the 18th, there's an expectation of increased volatility, which, well, is a holiday, but still, there's an expectation of increased volatility. On the upside, it wants above 115, and on the downside, it wants below 108. But you can see that the curve is a bit steeper on the upside, toward profit, and it seems more likely. The trades that have come in today for Saturday, actually, when I move the slider forward, the closer the trades are to the recent hour. Of course, you can't really say it like that either. Now the curve has gone back to its original shape again. Look, at the beginning, when we remove the first few trades in this area, the curve takes on an upward trend here, and then it returns to its original form. So, in fact, both possibilities are being observed. Okay, let's take a look at. Look, from last Friday, the 10th, until now, for the expiration date, I think it would be October 24th, Friday, actually the upcoming futures. October 24th, let's see, to get a kind of weekly perspective, and interestingly, it's bullish. It's a very twisty and turny curve, but it pretty much gives us a bullish outlook. Look, here we're at 112, the delta is 112 if the price reaches 112, that's the delta, and then up to 123, that's seen as the ceiling, meaning they've allowed room for the price to move up to 123 as the call ceiling that's been sold. And after 123, again, we have call buying up toward 134. So if I bring the trades forward, you'll see the outlook is still bullish, but here it changes a bit. Here it takes the form of A. It turns into a call selling, a call sale that the ceiling has been seen, but look at how far it's been set, meaning, in fact, the ceiling has been considered up to 140, even up to 134. If we move forward, again, you see the same situation, meaning we reach 118, and from there, the ceiling is seen up to 130 to 135. So, once again, there's a bullish leg going up. That means for Friday, October 24th, we can say that during the past week, the trades that came in still have a somewhat bullish outlook. Alright, if we go to the process database for October 24th, from last Friday until now, the trades that have come in with the array for the October 24th expiration, you can see here that the bullish view is showing itself much more clearly. For Friday, October 24th, the bullish outlook is much more apparent. Also, I've set the open interest to 1, so that contracts that have been closed and exited are no longer counted. You see, even as we move the slider forward, the bullish view still dominates up to 119, where we have a ceiling. That means, with the price increase, we have a delta at 119 to 120, and after that, we have call buying up to 135. So, we can say that for October 24th, the market is dominated by a bullish outlook, and it's possible that the price is finding a bottom here for its next upward move. Now, let's go back to our main setup, meaning the trades from the start of today until now for tomorrow's expiration. Let's look at the trade details. Out of 6,100 Bitcoin, 2,463 Bitcoin are call and put option buys, of which 779 are call buys and 1,686 are put buys. The target for these put buys is below 109,700, which we're very close to. If we move the time back about 18 hours, we get to here, on these candles, this green candle or this red candle, the contracts we're analyzing entered the market, and most of them are put buys. So, the puts, as you can see, their target isn't that far off. They're aiming for below 109,700. If we look at their gamma, if it would show us the gamma, which it doesn't, but if we estimate the gamma based on the delta, it's right around here. The peak gamma is usually at the midpoint of the delta, so around 109,700 to 109,800 for the bulk of these contracts. So, in a way, we've pretty much reached their target. Here, puts are dominant. Where do call buyers want to go? Call buyers are aiming for above 112,400, above 113,000. This is the area they're targeting as their goal. We could say that, of course, if we want to calculate it this way, considering these shadows, the calls have also come down to around 111,900. So, their target here is about 112,500. In this fluctuation, you could say that the call buyers' targets have been somewhat reached. But still, if we look here, there's still a bit of a gap to the call buyers' target. Now, let's look at the sales. There are 3,636 Bitcoin sales, of which 1,480 are call sales and 2,155 are put sales. Again, put sales are higher. And here, you can see that the put sales are exactly at the point where the red line meets the break-even line. 110. The 110 floor has been reached. Right now, we're at 110,300, so in a way, it's been achieved. And where do the calls want to go? Excuse me, just a moment. Call sales. Look, we still have some distance from the confirmed ceiling at 112,200. So, we can still move upward toward 112,200 to 112,500. That's basically the point where call sales have seen the ceiling. It seems like we can still have some fluctuations. Of course, this candlestick that we're seeing on the daily chart, if this candlestick, as I mentioned, now the body has come down a bit, if this candlestick closes as a doji, just like the doji we had here, we can expect to see a bullish candlestick for tomorrow. That's another point to keep an eye on. Alright. Let's go to the process database. And we'll activate all the contracts as well. As I mentioned, we'll set the open interest to 1 so that the closed contracts are removed. 1,743 new Bitcoin contracts have actually entered the market. We'll take these into account. Now, let's see. How many large contracts do we have, meaning those with 10 Bitcoin or more? 62 contracts. Let's check for contracts with 15 Bitcoin or more. There are 18 of them. We can analyze these, and as you can see, those with 15 Bitcoin or more also have a stronger bearish outlook. The stronger bearish view is aiming for below 188. Now, let's look around and see what strategies we have. As you can see, the strategies here. We also have two block trades with the same number. Look, here's one of them. Right, and here's the other one. So, this is a long straddle. It's expecting increased volatility. From above, it's profitable at 114 and higher, and from below, it's profitable at about 109,200. This is a neutral strategy, meaning it doesn't tell us the direction. It can't determine which way the market will move. Again, here we have two of them, and as you can see, it's the same thing, a long straddle, expecting increased volatility for tomorrow. We can interpret this as anticipating more volatility, especially after a couple of dull days. People expect the price to make a move in one direction. So, these are the same strategies we have here. For example, there's a 39 and an 18, all in Bitcoin, which are long calls with a strike price that needs 111 and above. There's also a 100 Bitcoin long put at 109. These are really high volume trades. By itself, the 100 Bitcoin put below 108 and 400 is aiming for profit, and then there's a 250. This 250 is also really big. This is another long put at 110, a long put at 110, which is now very close to being profitable, very close to profit. So, if we add these two together, the 100 Bitcoin and the 250 Bitcoin positions, it basically creates a long, a put purchase, that profits below 109. That means its target could be 109. Now, let's take a look at the 24-hour liquidation map. You can see that down below, around 110, there's a liquidity zone, then it's empty until 108, and at 800 we have more liquidity below. Above, the liquidity level is from 112 and 200 up to about 113. Let's look at the 48-hour chart. In the 48-hour chart, you can see that the amount of liquidity is higher on the upside, with a concentration around 113,800, almost 114. And below, the liquidity is less, although we do have liquidity at 109 and 109. Honestly, it's become really difficult to determine the price direction, really difficult. It seems that, even if we turn on our indicator, let me clear this and turn on my indicator, even for several days, our indicator doesn't show a strong move downward. It's as if it's showing resistance at the bottom, resisting a drop. On the other hand, we're also seeing this divergence in the RSI compared to the price. These are all arguments in favor of a move upward, in other words, filling the gap needed to complete the double bottom we talked about. This move could happen, and the reasons we mentioned, along with the liquidity levels above, overall show that the liquidity zones above are stronger, which could pull the price upward. And finally, on the daily chart, this doji, after two bearish candles, if this doji closes like this tonight, in my opinion, we can hope to see something like this, meaning a reversal upward. At that point, this double bottom would, in a sense, be completed. If we take a look at the weekly chart, well, for now, the weekly doesn't really tell us anything special, and there are still 3 days left for it to close. So, we can stick to discussing the daily chart. I think that despite everything, we might still potentially see some downward moves like these, and it could certainly happen again, but we are still firmly holding on to the idea that we can indeed go up. Now, the overall pattern might shift just a little bit, but we could definitely see something quite similar to this. Break time equals 0.5s/. We could see a reversal upward, maybe up to around 115, where there might be some back and forth, and possibly even a move toward Considering that the expiration date is Friday, October 24th, and we also looked at the next 2 weeks and saw that an upward trend is expected, thank you for your attention. I hope this was helpful, and until the next analysis, goodbye.